Alright, Assalamualaikum warahmatullahi wabarakatuh. How are you all today? Basically, I would like to continue on the topic that we have discussed last week is regarding about the portfolio investment. And this week, okay, this lecture, okay, I will continue on the what I call it, the need for policy statement. So because whenever you do a what I call it a portfolio, you need to have some policy that you need to set up. Okay, for example, here the um, you need to understand. Okay, we need to understand what would be the investors' needs. Okay, and then articulate realistic investment objective and also constraint. So So what are the real risks of an adverse financial outcome? Okay, basically, we have seen um, recently the previous the what we call it, the adverse outcome, okay, financial outcome when Malaysia was previous government uh, lose in the election, and companies which are receiving or dealing with this previous government, the Barisan Nasional, who have been receiving contracts and also what I call it, projects from the government, the previous government. So basically, what happened is that their share price has plunged down to a certain value that sometimes is uh, the risk that whenever there is an election, then we should look at whether these companies that we invested are okay. So we call it receiving a lot of grants or contracts from the government or not, and what will be the outcome if okay if the existing government lose and then a new government take over the administration. So what will happen to the company? So we need to advise the clients. We need to advise the clients about the real risk, okay, if an adverse financial outcome happens. Because in the election, definitely the investors want to have a what you call it, the stable economy. Okay, they don't want to look at these uncharted areas whereby these uh, the companies having a high volatility um, in price because of the change of government. However, okay, when things happen, then we have to be prepared. Okay, we have to be prepared. What would be the real risk that we are facing? The same thing. The same thing. If, for example, if the policy of U.S. government, for example, in a few months back, okay, Donald Trump has actually set up a policy which is not friendly to the China and also to the rest of the world in terms of imposing tariff to steel, for example, steel tariff. They imposed a steel tariff to um, 25%, if not mistaken. Then that has actually affected the price of steel companies. All right. Okay. And what would be the emotional reaction that I have if the stock price goes down? Because if the stock price goes down, you have emotion. You'll be sad. You have your fear. You have your anger. You have so what would be your emotion? So basically, this is the thing that we have to deal, okay, in the stock market. In our emotion, okay, our emotion. If we cannot deal with our emotion, that is going to be very difficult for us to be in the stock market. If we cannot deal with our emotion, right? So, how knowledgeable am I about investment and the financial market? Are we still new in the market? Are we newbies? They call it newbies, or are we have done some reading and some knowledge seeking? Okay, we know some of the keywords on the financial market, and we know what the financial market is all about. Then we can see whether are we in the right track or not, right? And then also because this is very important, even the knowledgeable, okay, the knowledge person who have knowledge in finance and investment, also they can lose money, right? They can also lose money, right? So this is not an exception, but it is the basic thing that you need to have the you need to have this um, knowledge in investment and finance. And what are the capital or income sources that do I have? How important is this particular portfolio to overall financial position? All right. Now, will it affect your whole wealth? Okay. Now, this is also another thing which is important, which is we will discuss under asset allocation. Okay. How much you want to allocate your money, right, in the stock market, okay, in the real properties, or in the bond market, or in the savings account, and so on. So, is there you have do you have any other income instead of the stock market, or you do not have any income? All right, uh, that this is the question that you might want to ask. Okay, because if the stock market is not responding well to what you have expected, then you might want to rely to other sources of income. Okay. What if any legal restriction affect me? All right. So you can see whether is there any legal restriction, especially if you want to buy from international market and so on. And how many would any unanticipated portfolio value change might affect my investment policy? All right. So basically, if you see that there is a changes in your portfolio, for example, in the case of the PRU 14, right? Your portfolio might be changed, okay, in terms of its value, okay, because we have MYEG drop down, GCAN drop down, and also we have there's another one which is CMSB also drop down. The value is really huge. I mean, if you think that the value change might affect the investment policy, maybe you want to change something. For example, during this after the PRU, what my policy might be one of the policies that not to hold companies which are too dependent with the government contracts. Okay, so that is one policy that might be useful in the next election, right? So that is one policy. Please, maybe we can need to write it somewhere so that we can know that one of these rules, okay, in all our policy, okay, should be done, okay, for us to have a realistic, articulate, okay, investment objective and constraint and so on. All right. And then also need the set standard for evaluating portfolio performance, and then we also have to set standards. Okay, what would be the minimum standard of your portfolio? Okay, provide a comparison standard, for example, in judging the performance of a portfolio manager. All right. And the benchmark portfolio or comparison standard is used to reflect the risk and return objective specified in the policy statement, and it should act as a starting point for portfolio review and client communication with the manager. So this is the need for a policy statement. Okay, set the standard. Other benefits is reduced possibility of inappropriate or unethical behavior of the portfolio manager. Help creates a seamless transition from one money manager to another without costly delays, and then provide the framework to help you resolve any potential disagreements between the client and the manager. So if we have this policy statement, then it is clear that the company and also the managers and also the client can resolve any potential disagreements if it arises, right? So we don't know. Okay, sometimes we are good at this, today. Probably we are not. We are quarreling. Okay, we are disagreeing on something else in the future, right? So if we have that policy statements, so that we can refer to, probably we can solve all the problems that arise. Okay, or dispute that arise from our disagreement. Okay, input to the policy statement. Constructing the policy statement begin with a profile analysis of the investor's current and future financial situation and a discussion of investment objective and also constraints. So you need to discuss with you, if you are the investor and you are also the manager of your portfolio, or you need to discuss with your portfolio manager. All right. So you discuss about what is your investment objective and also what will be your constraint. Okay, your objectives might be you want to get you want to use your investment income for your uh, to cover your pilgrimage Hajj cost, or maybe you want to buy a house. Okay, that is an investment objective, or maybe you want to secure your what you call it retirement fund and so on. And what will the constraints? Okay, the constraints might be in terms of